Preparing for the end of the tax year. So when we think about tax planning, I always think that the big thing is pensions, because pensions are really, really good for avoiding tax. And it's, it's not just some sort of dodgy thing. It is what the government intends when it gives the pension allowances. So you're allowed £40,000 a year, and that goes against your profits, so it reduces your tax bill. But as we go into the next tax year, you do lose some allowances. In each tax year, you're allowed £40,000 that you're allowed to put into your pension, but there's always 4 years that's in play, because it's this year plus you can use the allowance for the previous 3 years. So that last 3 years ago allowance drops off when we go into the new tax year. So you just need to think about that. And if you've made a lot of profit, you've got excess profits, then putting it into your pensions can be really good. It acts as a sort of family trust fund, so it is really nice from a tax planning point of view. It goes out to your estate for inheritance tax, all sorts of things like that. It's really helpful as well if you're sort of my age or a little bit younger, because either as you approach 55, then you get access to your pension. So if you're a bit below that or a little bit over that, then you get better access to your pensions. Obviously, it's less attractive if you're sort of in your 20s or 30s, because you've got your whole life and you perhaps want to have more of a priority to buy a nice house than put money for your pensions. Then there are small allowances for individuals. Things like your ISA, you get £20,000 ISA allowance every year, so putting money into your ISA means it doesn't get subject to dividend tax, any dividends that you receive, and you don't pay income tax on the interest either, so putting money into ISAs can be really good, and just topping those up. So if you haven't done that, that can be an interesting thing to do. And at this time of year, a lot of people who've got larger tax bills, and know they're going to have larger tax bills, put money into EIS, CDS, venture capital trusts, because there are some significant tax savings from doing that. That's investing in small businesses. And the reason that there are very good tax savings is because they're very high risk investments. So just as you might get a lot of tax saving, you also, if they don't go well, you will lose all your money on the investment. So, buyer beware. Anyway, there we go. That's another one to think about, and now is time of the essence to do that, because we are coming up to the deadline. So corporation tax, I think it's been well publicised that corporation tax rates are going up in April, so we just need it's quite a good idea now to just think about your group structure and make sure you've got the right number of companies in, to make sure that you can use your allowances to the best to the best way that you possibly can. So I think that's one thing to do. And also, might be too late already, but thinking about any capital investment that you can do which could reduce your tax bill if you've got a significant tax bill, if you can do that now, and you get these super allowances that are available. So effectively we're getting next year's tax relief this year. Hooray, there's a small benefit in the tax system. Who'd have thought it? For people that own and manage businesses, personal allowances, so all the allowances have been frozen. So I think that it's even more important to use them all. So if you've got family members that work in your business, you want to make sure that you pay them all, because sometimes they work for free, and actually using their personal allowances is something you might want to think about doing. And just thinking about whether you're using the nil rate band, the first £1,000 or so pounds a month, and also the £50,000 a year or so before you pay high rate tax, because most people sort of accept basic rate tax but really don't like high rate tax. So if you can use your allowances and move those around and pay the dividends, so look at the dividends that you've paid, that's another thing that really is important for tax planning. Then capital gains tax. So the capital gains tax, there's an allowance for capital gains tax as well as the allowance for income tax, so it's 12,300. So rather unfriendly act of the Chancellor was to halve that for the next tax year and halve it again in the following tax year. So if you want to, if you've got gains that you want to realise, it might be that you want to realise them in this tax year, because that you get that 12,300. If you're a husband and wife, that's two lots of 12,300 potentially. So you may want to use that. And if you've got pregnant gains, you might just, and by pregnant I mean gains that are inherent in the current price but haven't been realised by actually selling the asset. So you might want to think about that, and it is that would be a good idea, particularly if you've got to sell investments reasonably soon, because that's what you want to do. Periodically, I think it's just really good idea to just think about some of the basics. So look at all your direct debits. You know, I know it's a boring thing to do, but just go through your bank statements for your business as well, very much for your business. I think it's even more important for your business and also for yourself, and just think about whether you're using all the services that you get the direct debit for, that you're paying direct debits for. I think that's quite important. And then because you know there is a lot of inflation, so all your other costs will be going up, so that's one to think about. And then just sort of general things you need to you know, if you haven't got a will, please do. You know, please get one, because it's really helpful if anything happens for your relatives. And a power of attorney, so that if you can't look after your affairs, particularly if you're in business, then somebody else easily can. And then while you're thinking of those deep and dark thoughts, you might want to have a look at your inheritance tax position. Inheritance tax is one of those things that people don't like thinking about, because they've got to think about their own mortality, which nobody likes doing. And I always think people my age always feel they're too young, and then people in their 80s always think they're too old. So there's like I always think there's a week in your life when you're not too old, not too young. But come on, just be realistic, and maybe you should just think about that, and whether you've got things in place that you would like. And so that's my summary of the things that you might want to think about as we go over the tax year. So think about pensions, think about ISAs, think about EIS, think about whether you can save a bit of corporation tax, and then just do a general clear up of all the financial litter that you might have. So that's my suggestion for this video. If you have got any questions, then you know where we are. If you subscribe to the channel, keep you up to date, and if you press the like button, I would very much appreciate it. Thank you.